Welcome to The Real in Real Estate, your gateway to the source. I'm so glad you're here. We're all about diving into the nitty-gritty of real estate, sharing insights, tips, and some awesome interviews straight from the industry's beating heart. From the latest trends to cool investment strategies, we've got you covered. Let's explore and uncover all the essential tools and knowledge you need for navigating the ever-evolving world of property and housing. Here we go. Welcome back to The Real in Real Estate. I'm here today with First American Title, and I'm going to let them introduce yourself. We're going to talk about title policy today, obviously. So, ladies and gentlemen.
Hello, everyone. My name is Justin Ramirez. I actually hold the business development position with First American Title, more specifically on the north side of Houston. So kind of the Spring, Woodlands, Conroe, Magnolia area.
Wonderful.
And then my name is Dana Taylor. I am the branch manager and I'm escrow officer as well. And so just a little about me, I have been in the industry almost 21 years or so. I know I look like a baby, but I started out when I was a toddler.
Yep.
And I'm a grandmother at this age, so that doesn't age myself. So I have
lucky you.
I've been around for a while, so I've seen the ups and downs, the ebbs and flows, all the above in the industry. So I'm very well versed, I think, in the industry.
Well, thank you both for joining us today. Thank you, Dana. First American Title up here in the Woodlands, although I'm sure all the branches are wonderful, but you guys are wonderful, and I really appreciate you taking the time to talk to us. So let's get started. A lot of realtors don't know, the general public doesn't always understand exactly what a title policy is. So what is the general purpose of a title policy?
Absolutely. So the purpose of a title policy, in my opinion, so in short, it protects you from claims against ownerships of other parties. So examples, for example, the title policy will protect you from unforeseen judgments and or liens or unrecorded documents, things that have not, I guess, that were either missed in examination or forged documents, rollback taxes. I mean, there's hundreds of things that you could go over that a title policy protects you from. So defects in title, erroneous deeds, mortgages, all the above.
Okay, so I was going to ask you, why do you need a title policy? But I think you just explained that. Is there ever an instance where a title policy is not required or needed?
So in some cases, some people ask that they don't want a title policy, so they would have to sign a notary title policy rejection form. But in most cases, your contract says the seller is going to pay for it. So why object to it as a buyer?
I have no idea.
In that case, get your owner's title policy. It's at the expense of your seller. The only thing that would be left is there's a lender's policy if there's a lender involved. So as long as the seller's paying for their owner's policy, which is full premium, we'll talk about, then their lender's policy, as long as the loan amount does not exceed the sale price, is only $100. So for a $100 piece of mind, I would pay the $100 for a piece of mind.
Right.
Why not?
Right,
so
right.
There are some cases where they don't want a title policy, and we say, unfortunately, that's not something that we're here to actually provide a title insurance policy to you. We would ask that you go to a real estate attorney.
That makes sense.
It's rare that you ever see it. And in that case, if somebody says, I don't want a title policy, you sign the objection letter and you don't get a copy of the commitment. I can't tell you what's against it because you don't want a policy. You don't want that protection.
Right. You get what you pay for, right?
Exactly.
So just for full disclosure, that's always negotiable. It's not always the seller that pays for it.
True.
I would say 9 times out of 10, but especially during a bidding war, a lot of times the buyer will pay for the title policy. And how is that calculated?
So the title policy in Texas is actually regulated by the state of Texas.
Right.
So it is all based on your sell price. Okay. So the higher the sell price, the higher the premium. But honestly, anything over 100,000, it's the policy or the formula is more in your favor. So I can give you examples of, I'll give you 3 examples, which I was prepared for this for you. Title policy at 100,000 is $832. A title policy at 500,000 is $2,940. Last example, let's give you $1 million. Okay, that policy is $5,575. So the higher the policy, higher the sell price, the lower the premium goes. It's under 1%, so it's not right at 1%. The formula, the higher the sell price, the formula is more in your favor.
Well, that's certainly worth a peace of mind, I would think.
Absolutely. Absolutely. And some people try to buy sight unseen. Some people try to buy without a title policy. I've bought property myself where I bought from an individual who did not get a title policy.
Oh,
And that was a nightmare. It took months and months and months because you have to go back and find people and erroneous documents or deceased parties in title. Oh, well, I'm the heir of it and I deeded it to so-and-so. Well, you
right.
can't do that. There's a lot of reasons why you need a title policy. It's no different in my opinion. It's why would you buy a car without car insurance? Why would you buy a house without homeowner's insurance? It's that extra layer of protection.
I would be surprised actually, or I am surprised if it does happen that a lender would even allow that because obviously the lender policy, the lender's going to do what the lender's going to do. But you would think that, they require homeowners insurance and everything else. You would think a lender would require that.
It
I'm
is,
surprised.
they say it's optional in Texas, but really it's not. If it's paid by one party or the other, not. So if in fact, say your owner chooses that they do not want a title policy and there's a
Right.
lender involved, you can exclude cash. So if it's cash and they say, no, it is what it is.
Right.
If there's a lender involved and you say, I don't want an owner policy, well, guess what? Your lender's policy is still at full premium. Somebody's got to pay the first premium at full price. And then at that point, the second policy, your lender's policy, or if you've got a second mortgage, a third policy, is a simultaneous issue rate, and then it's reduced only to $100. So in my opinion, it makes sense to get your
Oh,
policy.
yeah. Yeah. I would not want to have some relative of a dead person come back and tell me they own the house or whatever the case happens to be. I
Yeah.
have to tell you a funny story. I did talk to one title company one time and they said, "Oh yeah, we have this great person on staff. She finds dead people." That's what they do. You have to go back and figure out who died, who's still alive, who owns what. It's a lot. I couldn't do it. I'm
There's
glad
a
you're here.
lot. We're in a way like investigators because the
Yes.
examiner might miss something, or if we have to get an heirship affidavit and you're giving me the questionnaire and you're only listening 2 or 3 brothers and sisters, but we go pull the obituary and it lists 5, 6, 7 children. Where's the rest of the kids?
Yeah.
So we
Surprise.
find out a lot of information, and a lot of times as a listing agent, for example, when you go to list, your seller's going to only tell you what you want to hear or a limited information. And then as a title company, we're going to find out everything they don't want to tell you.
Right. Oh,
We're going to tell you if they file bankruptcy, if they're actually married to each other, if they've got 3 mortgages and they only told you of 1, or if they're in default, all kinds of stuff.
I have to tell you a quick funny story. Well, I guess it wasn't funny, but if you look back on it, it's funny. So I was at a closing with a new agent. She wanted someone to go along, make sure everything went right, hold her hand. We're sitting at the closing, and the seller is signing papers. She represented the seller, and all of a sudden, I know you guys do a lot of due diligence up front, but they had to ask again, "Are you married?" And he goes, "Sort of." I said, wait a minute. That's like sort of being pregnant. You're either married or you're not. Well, he had
Right.
gotten married in secret because of something they wanted to do with health insurance, blah, blah, blah. So everything had to stop. They had to find the wife. I mean, it was, now looking back on it, was funny. At the time, it was quite frustrating.
Well, we see those scenarios all the time, and that's the first thing I'll pan a room. That's a dead giveaway. Oh, you're not married, but what are you wearing? That's a wedding ring. Where's your spouse? So
Yeah.
we see all kinds of things too.
Yeah.
So
Well, let's talk about one more aspect of the contract, because since obviously I do residential, the buyer and seller can negotiate to purchase extra boundary insurance, is, I believe it's in the section of the contract. A lot of times they do, a lot of times they don't. Could you briefly explain the importance of that? And it's a very minimal fee. To me, it's worth every penny, but why would someone want to get that?
So what you're referring to is the survey deletions on the owner's title policy. So that is a standard endorsement that we give to a lender. That's one of the ones that they actually require. They want us to ensure the boundary of the survey and the property itself. Years ago, title company said, you know what, let's offer it to the owner. What is the risk? So in this case, it's only 5% of the owner's policy.
Mm.
So it's pennies on the dollar.
Yeah.
So here's an example that we've had, and I give this example to everybody because it's happened. We were either the 3rd or 4th title company that has insured a transaction. So it had gone through 3 to 4 sales prior to us. Okay.
Wow.
Our transaction had closed and funded because we're the last title company that insured the transaction. And our now owner called and said, hey, there's a gentleman knocking on my door saying that my house is on his property. And we're going, absolutely no way. How's that even possible? So we're scrambling, okay? And I'm not the escrow officer, it is the branch, but it happens. We look at the legal description, we're looking at our tax cert, we're looking at the appraisal district survey. It all matches, lot block section, everything matches.
Yeah.
But from day one, the appraisal district was wrong. In this particular case, it was a new development area. Let's just say it's
Okay.
the first house that was
Oh.
built on the street.
Oh my.
Yeah. So day one, they built the house on the wrong lot.
Oh. Oh my
Okay.
God. Oh my
Yeah.
gosh.
And so in that case, that was actually true. And so the owner at that time did not have the survey deletions on their owner's title policy. But at that time, the escrow officer said, hey, I need you to initial this little spot on the closing affidavit. So they were under the impression they had that on their policy.
Oh.
So guess who's on the hook? The title
Oh
company.
my. Yeah.
So in that particular case, it's worth doing as an agent. Always protect yourself, because at the end of the day, they're going to come after. They're going to look at you and say, well, why didn't you tell me? Or why didn't you do
Right.
this? Why didn't you suggest this? No different than a home warranty. But in that particular case, because it was assumed that they got that coverage on their policy because they initialed to it on the closing affidavit, even though they weren't charged, we had to go in and get with the seller that actually owned the land
Yeah.
and the gentleman who owns the house on the
Developer.
wrong lot and get everything flip-flopped. So
Wow.
that claim was about $20,000. So not everybody has just $20,000 sitting in their bank just to just,
No, not the average
well, they
person.
don't. It's no different with your title policy, just your standard title policy. For that reason, you should always get a title policy. Because
Right.
otherwise you're going to bat for yourself. Instead of you got a title policy, we're going to bat for you. We're paying that claim if we're in the wrong.
I like that idea. You pay. That's better than me paying.
Always protect yourself.
Yeah, it's like $800 versus 20,000. I think I could make that call.
Yeah, absolutely. For the entire transaction, if it's an erroneous document,
Yeah. Oh
or if
my
it's back
gosh.
taxes and they go to foreclose, all the above, you never know.
Another thing to check, not well, just from a real estate aspect, the legal description on a contract. Agents out there, buyers, sellers, please make sure the correct legal address is on the document so you're not buying a lot or a house you didn't really want to buy.
I can give you examples of that too as a listing agent. Let's just say your seller owns multiple lots in the same community. Oh, we have a few pop-ups. Give me just a second.
Okay.
So make sure whenever you're listing the property, if they've got multiple lots in the same community or consecutive, if they're only going to sell one, make sure your listing only shows the one lot. Make sure your contract only has the one lot. We've had situations, because I've been around long enough to give you stories for days,
Yeah.
where they have multiple consecutive lots. In this case, it was acreage. And they were only going to sell half of it. Well, they
Oh.
contracted for all of it. And so
Oh my.
when they came in and did inspections, the buyer came in and do inspections, the seller was at the property. Sometimes they're not always at the property.
Right.
In this particular case, they were telling the buyer, hey, just as an FYI, we're going to keep this portion. And let me do this. We're going to keep this portion of the property. We're going to build our new house over here. And they're kind of looking at each other going, you
Wait.
contracted for all of it. Now
Oh
you're
my
telling me you're
God.
only selling a portion of it. Verify your legal description is what we do. And so
Oh.
every time, immediately, as soon as your contract comes in, the first thing we do is go to the appraisal district and make sure that your lot, block, and your section is correct. Is your intent to sell just the one lot if they've got multiple?
Right.
Or is your intent to sell all of them if they're only trying to sell one? So yes, for sure, verify that legal description.
Well, okay, as a residential contract, when you give the, I'm not talking very well today. When you give the
That's okay.
title policy to the buyer and the realtor, what should they be looking for in the policy? I know people talk about Schedule C, but I think first of all, you need to verify the names are right. That's usually on page 1, right?
Yes. So look at your title commitment. A lot of times you're going to look at Schedule A. And I tell people that's your hey, like who's got interest in the property, right? So Schedule A should have the same name as your seller that is contracted. If not, you need to question, well, who is this? Maybe the last name's different. Maybe did they get married or did they get divorced? So for the most part, as long as Schedule A, all the interested parties on the contract match Schedule A, then we're good. Schedule B is your butts, is what I tell people. It's the things that we don't insure. I'm not going to insure deed restrictions. We'll give them to you. We don't interpret them, right? Same with mineral rights. We're not going to do the research. You can hire a landman to determine if there are mineral rights or if they're even paying any kind of royalties, but that's not something we do as a title company. C is a good one to look at. Honestly, that's the first thing you should. You need to look at A and C. C is
The
what
A's, the butts, and the C's.
Yes, these are your conditions. What do we have to clear to get to closing? So you're always going to see every title company has on Schedule C, 1 through 4 is standard. So you're gonna look at 5, you're gonna look at 6, 7. It could be 3 and 4 pages worth of stuff.
Oh.
It could be a quick 2 or 3 different little things, but you can read it. It'll tell you there's a mortgage against the property. Well, how do you satisfy the mortgage? We order a payoff. You might see a bankruptcy. It may not be against your seller. It could be a similar name situation. So we might get a statement of information and say, okay, I now need this additional information. Give me the last 4 of your social. Well, the bankruptcy, and then these don't match, or maybe it does. There's a lot of things we have to do on Schedule C, but a lot of it in a way is almost self-explanatory. A lot, for the most part, is getting a payoff and or release.
Okay.
So I'd say the most would be A and C.
Yes, I like the way you described it. The hay, the butts, the C.
Yes.
That's easier. That's very catchy. I like that. Easy to remember. Well, what else do we need to know about title policies that we haven't talked about so far that really sticks out in your mind?
I mean, I think we hit on it pretty good because it's an additional layer of protection that you have. And without it, you're on the hook for everything. If you decide not to choose to get a title policy, somebody's saying there's a rollback taxes. Maybe an exemption was removed and the seller said, oh no, I'm 65 years of age. I'm going to keep it on my property. I'm not going to transfer it to the new one. But then they decide to after the fact and they roll back, or there's a deceased party in title and they roll back 5 years.
That's a lot of taxes.
It's a lot. We've got one today. It's $80,000. So, ma'am, right. So it's the things that people don't think about. At the end of the day, yes, it could be cookie cutter, the exact same thing, but not every transaction's the same. Not every title that we pull is the same. Not every situation is the same. So
no, I'm sure there are new things you see every day that you hadn't seen before.
we can talk off record. Off record about what happened today.
Okay. Yes. Yeah, we won't go there.
Yes.
Well, I really, really appreciate you guys, both Dana and hi, Justin. You're so quiet back there.
Well, I brought the expert over here.
I know.
She's my escrow pro, so I'll let her take care of it for
Well,
me.
that's why I do this podcast. I want everybody, whether it's a buyer, a seller, or an agent, whether it's a new agent or not new agent, there's always something to learn. And the best way to learn it is from the experts, from the fact. Get the facts. Don't just word of mouth or, oh yeah, she told me she's been in the business for 10 years. She ought to know. Not always. Things change. Let's get the facts.
Yeah, very true.
Well, thank you so much for joining us on The Real in Real Estate. And if you guys have any questions, do you want to give any website, email, contact information, anything about your company?
Yeah. So we're First American Title. I'm currently located at the Woodlands location until our Magnolia branch opens, which should be maybe 60, 90 days. So I'm Dana Taylor. My email address is danataylor@firstam.com. You can reach us at 346-201-7370. And then Justin, if you want to give your words.
Sure. One thing to consider as well, since we're wrapping it up, outside of course, an amazing closing experience with Dana and First American.
Yes.
Clearly, she knows what she's doing over here, so she makes it as smooth as possible. So you and your client walk away happy, right? We all want to walk away from this is the final step. We want to end it on a great note. Outside of that, First American, we've been around since 1889. We're a large company.
Wow.
We're very big on technology. So one thing we like to offer our realtors and our clients is we've got a lot of tools and resources to help you with your business, to help grow your business, to help market your business, to help you work a little smarter, not harder, right? And so a lot of the things that, when you're looking back at the end of the year and you're thinking, man, if I would have done these things, or I should have done these things, and had I done those things, I bet my business could have been here. And, these are the type of things you should be doing. We've just got some great ways of doing it. We've got some excellent marketing materials. So I'd encourage anyone, if you're interested, you don't know about it, please reach out. They can email me. It's pretty easy. It's JUS Ramirez. So JUSRAMIREZ at first, spelled out FIRSTAM.com.
Wonderful. And I use some of your wonderful marketing materials. They are great. And I appreciate that.
Absolutely.
All right. Well, thank you, Dana and Justin. I really appreciate the time and look forward to seeing you again at the closing table.
Yes, ma'am. Thank you.
Have a good one. Bye-bye, everybody.
Bye.
Bye.
Thanks for tuning in to The Real in Real Estate, your gateway to the source. Be sure not to miss our upcoming episodes loaded with fantastic insights, expert tips, and all the latest trends in the property scene. Don't forget to stay connected with us on our Trilogy Realty Group socials, Facebook, Instagram, YouTube, and even TikTok. Until next time, take care.